Pay attention and I will be able to show you what is happening within this price action here. My liquidity and structure model is played out there very well, and I want to take you through it. Just have time for me, and we'll also go through this price action in the lower time frames to be able to help you understand the price that is happening there. The very first thing you always have to do is to look for price, trace price. Just start to trace price like this and look at the low or the high. In this case we are selling, so the low that was able to take out a previous high. So we see that this previous high was being taken out before the market dropped to the downside. You are interested in this low. In this sell scenario, we are interested in that low. This is how we start the market structure. So when we take this away, we can see that this low was able to take out this high out. Since that high is taken out, it has validated the low as a major low. Now we have to wait for that low to be broken. When that low is broken, the highest high which it has created here becomes a valid high. So now here is a valid high after it has broken this. But I specifically picked this one to be able to show you something that you may not see. Now, whatever I have been saying is that if we wait for this low to be broken, we have to look for the high here that has broken it. Now, with your experience, you will not still be able to tell which high here has broken, because the highest high is this one. And this is where you have to step down to one time frame. From the M15, we go to M5. And the reason is we have already identified our major low here, and then our major high has been formed. Now we are only trying to look for the liquidity high that has broken this low here. That is why we can be able to move to the lower time frames to be able to say that, to see that one clearly. In my experience, I'll be able to use even the wicks and the movement like this to tell that there was a pullback here. Going to the lower time frames will just be a confirmation for me. But to let you understand it, let's go to M5. In M5 here, we have our major low, which we have already marked using M15, and then the major high here. The lowest low that is created is this low here. We can already see that. Now the question comes, where will price try to pull back into, which is our liquidity? It will try to target internal liquidity within this range which we have identified, and that liquidity is the high that has broken this our major low. If we trace price from here, we can see that it came here and then the pullback went here. Trace it to the highest high there and trace it down. We can see this is the high that has taken out this low here. We go ahead and mark that particular high as our liquidity. This is our liquidity, and we are going to wait until the market takes out that before we will be able to get inside the market. Now we have set up everything. We have our protected high here that's taken our liquidity. We have a valid major low here and this valid major low here. We are waiting for market to trade into it. But before market traded into it, look at something that happened here. I taught you about equal highs. Market came and fed more liquidity into this liquidity. Let me just take this out for now. You see how they came back into this? If you watch my equal highs, equal lows video, you will understand this. They created this high and then broke structure. Did all this, just look at it as noise, and then they came back to it, just respected it, drop more liquidity into it, and then run down. You want to see this run down. Many people are beginning to think that, oh, now the market is going to sell and they will get into the market here. And to give you confirmation about this manipulation that the market is doing, look at how fast they came back to the zone. They came back to the liquidity and take it, and after that market dropped. It's not about chasing moves, it's about understanding how the price is moving so that you can get into the real moves. Otherwise, most of these things are just noise. And if you understand it, you are able to take 1 or 2 setups, you are done for the day. And you can be able to get this 2 or 3 setups if you are trading 1 or 2 setups, even a day or 2, a lot of them. This was equal highs which they triggered. Our internal liquidity has also now become relative equal highs, giving us more reason to believe that they would like to come back. This is now the high, our internal high. They came back to it, and personally I would have been executing this trade directly because I have a protected high to be able to place my stop, which is this here. If you are looking left here, the high that was here took liquidity from the left and then ran down. I would have been happy to place my stop just above that and then try to target the lowest low that it created here. This low that it created here before it moved to the upside, that would have become the potential major low will be formed. That will be formed, and if it has to be formed, then it has to be broken. If it breaks, then this high becomes a potential major high. This is it. We got it, and then it tapped for about 5R and price went to your direction. This is how simple it is. When we go back into M15, so when we come back into M15 here, look at this structure, all that was happening here. Other people will be saying, especially those who still have not developed patience, all this price action, you wouldn't do anything, you have to wait for all this to happen. Yes, but you can always look at it in the lower time frames. In other ways too, this could have also even been a setup where you can even take it from here, and now you are waiting for this setup again to take it here. So you can, if you understand it, you are going to trade every move that is happening in the market. I want us to go to M5 to be able to identify this structure here. The reason is that in M15 we cannot see anything here. Look at, from here we came down and then we broke again, and then we came and then we broke again. All this is respecting the highs that it is creating. We don't want that. We want to see something that is taking out another something. If we go to M5, so here in M5 we can see, if you have also read my videos about the external liquidity, this is external liquidity. Price came, took that low and then went up a bit, and it is external liquidity because it took out this low and then broke this. This low becomes a valid major low, and price can sweep it to the upside. Now you have to ask yourself, which low led to the break of that low here? Which high rather led to the break of this? And this is the high. Immediately they swept that high, price started to come down, and that was a trade because this was liquidity. Now this low here becomes your valid low, and price came all the way down again. All you have to do is to identify the high that broke it, and this is the high that broke that one, and price again went up to that, took it out and then ran again. You have to identify another low, this low that led to all that, and you wait for price to break it. And look at how beautiful this is. This, when we draw it like this, let me bring this back. When we draw it like this, look at the high that broke it. It came all straight down and broke it, and the high that broke it is what led to this trade here. So we even take this from the lower time frame, took out that high and drop. Even if you come to the lower time frames, you will be able to understand other trades that you cannot see in the higher time frames. And if you are in the higher time frames and you cannot see, then you come to the lower time frames. If you are in the lower time frames and things are getting tedious, then you move back into the higher time frames. And these 1, 2, and 3 were all trades using the same technique which I have shown. You could always just try to maneuver your way out by just following this specific criteria, and that is it. I don't want to make the video a very long one. I just wanted to do this place, and then I decided to just show more light on this. You see the same thing in the M5. This was the low that broke this, and they just continue to do it. But why is this one the bigger one? Because the major low here, and then high here is from the higher time frames, which is M15 in this case. That's where we have a bigger move to come to the downside. If this makes sense to you, comment, say something in the comment section. What has what brought light to you, and subscribe, share, and then like the video. Let's push the channel to a different level.